Student loan debt has been one of the more crippling things for a lot of young people in the United States over the past couple of decades, in particular for millennials which for them, college is far more expensive for them now than it was for me in Generation X when I went to college back in the 90s. And with the mounting cost and the amount of loans people were getting and the number of years it takes for people to pay off those loans, it was yet another thing that hurt the middle class, hurt the underclass, the working class, and the poor to catch up. Meanwhile, that wasn't such a hindrance for the upper class and the rich and the wealthy. Well, the current Biden administration, along with lawmakers in Washington, have now passed the student loan forgiveness program, and that means that after all of this time of talking about it, there will be some relief for people who have taken out loans for students. The big question is what to do with that money once you get it, and we'll discuss that in this video. Thank you guys for checking out this video. This is Wrestling with Finance, the YouTube channel for people who have struggled with finance in the past and look to do better with it in the future. And certainly if you had mounting student debt in the tens of thousands of dollars, you definitely were struggling with finances in the past. It's crazy to think about it because, again, when I went to college, it was expensive, but it wasn't like anything near what it is today and what a lot of millennials are paying for and what a lot of Gen Zers are looking at. And there's a lot of reasons that people have attributed to that over the past, whether or not it was increased salaries for professors or the sports programs needing all that money for the stadiums or the science department or books or whatever it was, or universities just overcharging people, whatever it was. Getting a higher education in the United States became almost out of reach for most people. Combine that with the fact that a college degree isn't quite what it used to be. A bachelor's degree isn't quite what it used to be. Back in the day, if you had a bachelor's degree, if you had a college degree, you were almost guaranteed to have a pretty good lifestyle. But it's not so much now because a lot of people have degrees and a lot of places might not even be looking for degrees. You have business leaders like Elon Musk and Mark Zuckerberg saying that degrees don't necessarily matter as much as to whether or not somebody can actually do the job that they're being hired for.
If somebody graduated from a great university, that may be an indication that they will be capable of great things, but it's not necessarily the case.
There's also a small wave now of people looking at trade schools and saying that trade schools are not the taboo thing that, if you couldn't get into college, you went to trade school. Now it's a viable thing because plumbers, electricians, people like that make a decent amount of money, if not as much, sometimes often more than an office worker. So it has had this current young generation rethinking things, and some of them also regretting going to college and paying all that money and taking out all those loans. But once again, the White House has now instituted this loan forgiveness program. And this isn't a little thing. If you did not take out a Pell Grant, you were eligible to get up to $10,000 in reimbursement on your student loans. And if you did take out a Pell Grant, which is usually for lower income people, you would get up to $20,000 in reimbursement. And there's two sides on this. There's a lot of people who, and rightfully so, think that this is somewhat of a bad precedent to set because you have people who willfully got into contracts, financial contracts, may not have understood them, and you're kind of giving them an out on it. And the other hand, the country currently going through a recession, currently with prices shooting up, currently with a lot of what's being called soft quitting or whatever it is, a quiet quitting at their jobs, which is essentially a lot of people 35 and younger. You slacker millennials. That's actually funny because the Generation X, I remember when I was younger, we were known as the slacker generation. But yes, people 35 and under are quietly quitting their jobs, which essentially means they're not quitting their jobs. This is not like the great resignation that we had last year when everybody had all that stimulus money and didn't want to work. It's now people who have jobs but are just doing the bare minimum just to keep the paychecks coming in. So with this atmosphere and, a lot of people's investments going down and money shifting around and a lot of uncertainty with the stock market taking a huge dip on Friday because of a lot of what Jerome Powell and the Fed are doing with increasing interest rates again and saying that they're going to keep increasing them until we get this inflation under control, which means there might be less jobs, there might be less money coming out. It might cost you a lot more to borrow money. Well, it definitely will cost you a lot more to borrow money, with the interest rates rising and rising and rising. So a question for some people out there, if you are one of the people like the 3.5 million in California or the 3 million in Texas or the hundreds of thousands in other states who are going to be getting $10, $15, $20,000 in student loan reimbursements, what should you do with that money? Now, a lot of people will tell you is that you should invest your money, but what does that really mean? And what's the best investment given the current state of the economy and the world economy at large? Because of the predictions coming out that the US economy is going to be hurting for another year or two, maybe all the way up until 2024, 2025, before we see a turnaround in the economy. Of course, nobody can really predict this, but it is true right now with prices of everything going up. And the possibility with inflation that you're going to have possible layoffs. I mean, you've already got Meta and Google already laying off people. A lot of companies are now starting to talk about laying off people, which is interesting given the fact that a year ago we had the Great Resignation and now people are getting laid off for their jobs, even the high-tech jobs. One thing to keep in mind too is that with increased interest rates, and some of you younger people might not notice and some of us older ones might have forgotten this, but the last time interest rates were really high, you could invest in some of these online banks. I remember Immigrant Direct at one point in time had like 7.5% APY on their account. So basically, if you put a good chunk of money in there, you were getting pretty significant returns, compounded daily, paid monthly in your account, which could be quite a lot of money if you're putting like $5,000, $10,000 in there. Of course, a lot of people are buying bonds. The bonds rates are really high. And again, that kind of goes inverse to the stock market. As the stock market tends to go down, then the bond market kind of goes up a little bit. Money market accounts are also and mutual funds are also things that you might want to look into. So are you saying don't invest in the stock market? No, I am not saying don't invest in the stock market. I would say be careful and study what you're doing and really kind of hone in on what kind of investments and what kind of risk tolerance you have. I mean, if it was me, I wouldn't take the $10,000 personally and go blow it on some altcoin that might have gone up like 200% in the last week and then wind up losing the whole thing if that altcoin, because it's not. Those are risky investments. If you want to be a little bit more conservative with your investments, you can get IRAs and invest your money in IRAs. Like I also mentioned, bonds and mutual funds are something to look into as well. High interest savings accounts, now the interest rates, if you look at some of the online banks, they are going up. But again, the stock market is not off limits, and neither is crypto. In fact, this is one of those times where in the future, 3-4 years from now, there will be people who will wish they had gotten in now. You know how this happens. You look at the chart and then people go, man, I'm investing now that it's going up. But boy, if I had invested back in 2022, I'd have X amount of money right now. And this could be true, and it's most likely true. I know in the middle of going through it, and this is the weird thing about the psychology of money, is when you're going through a downturn like this, logically, we can all understand that you want to get in when the market is down and then cash out when the market is high. But psychologically, most people, when the market is down, they don't want to get in because they're afraid of losing money. But again, that usually is historically the best time to get in. As the saying goes, fortunes are made in recessions. The main takeaway from this, though, again, if you are one of these people who are going to be getting tens of thousands of dollars back in this loan forgiveness program, and I will provide a link down below where you can see all the information on how you can see if you qualify or not to get student loan forgiveness reimbursement, is to do your research before you go out there. And absolutely, I will say this, I wouldn't blow my money and go and buy clothes and new cars or the Xbox whatever or the PS5 or take a vacation or any of that. I wouldn't blow the money, especially given the fact that the economy is very, very shaky right now, and we don't know how long it's going to be down. We don't know what the job market's going to be. So any bit of cash that you can have, that you can rely on as an emergency fund, this is probably time to get that 1, 2, 3 month emergency fund, most likely a 3-month emergency fund set up, where that is you have enough money in some sort of savings account or some account somewhere where if you needed it for 3 months, you could pay all your living expenses for 3 months. Typically, some people even have it up to a year's worth of money, but you know, for most people, $10,000 is not going to cover that. So that is another option you might want to think about. The most important thing, again, is to remember that, you know, with uncertain times right now, it is probably more important now than ever with all the uncertainty going on and not knowing where the economy is really going to be going in the next 2 to 3 years. And some people predicting that it could be pretty bad, that you become as financially literate as possible and take much more of an interest in how money works, in how your finances are set up, and not getting yourself into any kind of massive debt, and taking the advantages when they come to you and being able to use them to your advantage. But I want to know what you guys think out there in the future. Of anybody who has gotten their student loan forgiveness money, let me know what you're doing with it, where you're putting it, what suggestions you would have from it if you're looking forward to getting it. And again, if you don't know, there's a link down below in the description box where you can check out where you can get more information about the student debt forgiveness program. So for now, thank you guys for watching this video. Be sure to hit the like button, subscribe button, and a notification bell. I appreciate it very much, and I hope you guys are doing well out there, and stay safe and stay vigilant in this kind of crazy time that we're going through in the economy. Thank you guys for watching, and I'll see you next time here on Wrestling with Finance. Be safe.